Hello everyone, welcome to the Insight series that we hold at JM Financial Center for Financial Research at IIM Udaipur. Today we have Mr. N Gauba with us, who has had a long stint in the industry at the highest levels in the finance and accounting domain. We are very proud to have him here and privileged to have him here today to talk to us and share his insights. Thank you, sir, for accepting the invitation. So I'll start with the overall reporting regime that we are in. You have been in the industry for a very long time. You have seen it all in that sense. And so are there any characteristics of the Indian reporting framework that are unique? Are we more or less stakeholder focused than other contemporary and comparable regimes around the world?
First of all, thank you very much for having me here. I would tend to agree that now we are following the global standards in terms of our reporting. We have seen a lot of changes coming up, whether it is in terms of our adoption to the accounting standards or whether it is in terms of reporting on a framework. While today we have seen a lot more disclosures, transparency and timely submission of the information. And good thing about India is that we have also adopted technology along with it. So our ability to reach out the information, to spread the information, disseminate the information to all our stakeholders has been far more efficient over a period of time. Secondly, I think the markets have shown that there is a premium which you get if you are a good corporate governance company, and good corporate governance comes from a robust financial reporting and corporate reporting by the management. And we see that today the world acknowledges that there is a huge amount of equity participation by the FIIs or by the institutional shareholders, a lot of inflows of fund coming into India. And the better thing is also that we are now able to gain to a scale. With our ability to be transparent, adopt to the changes, we have gone and acquired many of the companies globally, and therefore Indian companies are no more confined to India but have become a global companies, including one of my companies where I used to work, Motherson Sumi, as we call it now, Samvardhana Motherson. So all these companies have created a value not only for the shareholders but as well as for the employees, for the society, and in all better services to the customers.
So you've had a long stint in reporting. Now when we think about reporting, it is generally considered more of a record keeping and historical kind of a perspective. But in your experience, did you ever have a situation in which, because of this function, fundamental managerial decisions in the companies were influenced?
Very good question. Because historically or traditionally, the accountant or the CFO term came much later. We used to be kind of a watchdog or the gatekeeper. Our more responsibilities were towards the compliance and all that. So we were not able to do something more for the business. But as the economy opened up in the 90s, we started thinking about the business. We started thinking about how the whole world works without compliances, so as to say. We go to a place, UAE or free trade zones, where you are doing something only for the business. So therefore, that opportunity which opened, we have grabbed it with both hands. In my experience, what we did in 2000, we started doing our 5-year plan in a public domain. While earlier we were doing it only once, we had done it only internal, but we never disclosed it to the public shareholders or put it in the annual report. So in 2000, when we put our vision in annual report, our vision to be a globally preferred solution provider, subsequently we added the word sustainable, and also our targets in terms of our growth to go from 100 crores to 1000 crores and return on capital employed of 40%, and dividend payout ratio of 40%. This not only help the investors or the public shareholders to understand where we want to go, but it help all our employees, all of us, to understand where the company will be. For example, when we are looking at even building a software, we are not thinking confined to only 5% growth or 7% growth, there where we want to be. And also when we are accepting a order, or when we are giving our quote and all that, or going in for an acquisition, we are looking at how much it will contribute us towards taking our company towards goal of 40% ROCE, and will it generate enough positive cash flows to give a 40% dividend payout ratios. So therefore, these kind of reporting, the transparency which comes in such disclosures helps the company management, and because you can't meet everybody and convey how you want to do it, you want decentralize. So when we started doing the global acquisitions, all the acquisitions what we did, we were able to integrate them better because we had a clarity in terms of our next level of growth, in terms of next level of achievements, and where we want to be in terms of our ability to service our customer, and but at the same time growth at what parameters. So therefore, it really helped us to become a global company with a strong balance sheet.
So you have been called an acquisition guru. I mean, are there any insights that you have from so many acquisitions that you have done?
Sorry, not acquisition guru. I have been part of the journey where we did a lot of acquisition. For us, acquisition were more customer driven. So we will look at an acquisition opportunity as if we are looking at some customer asking us to do something, and what really mattered is that we will set our goals, financial parameters at the foremost. Does it make economic sense? If it makes economic sense, we will do it, and on what terms. So maybe there will be discussion with the customer and as well as other stakeholders, but we were willing to go ahead with an acquisition, but it has to meet our financial criteria. Unless and until we will be very clear how will we reach to the path of 40% ROCE, we will not go ahead. It also means that you might say no to many of such opportunities, but somewhere you have to really work hard, because I mean, making money is not easy. Making money is something which has to be in your DNA, that it is a blood line of body. So therefore, you must be willing to sacrifice a top line if it does not meet your criteria. It requires huge amount of financial discipline, which I think we have been able to put into the system.
And was culture a big challenge for you whenever you acquired another company? And in terms of translating that gap into financial implications, were there any models that you followed?
I think it's a very limited way or a short view looking at a culture. What is important is business is done on business terms all over the world. We being an OEM supplier, automotive supplier, the customer requires car parts or the commercial vehicle parts at a competitive pricing, at a quality is given, and 100% delivery. So the customer expectation from you as a supplier are the same. So we are unnecessarily bringing culture into play. We have to focus on our business, what our business KPIs are, and we have to work towards achieving that.
So last question from my end. So a lot of our students aspire to have a successful career in corporate finance and emulate a journey, something like yours. So any advice for them?
Yeah, I think you have to be passionate about it. When you do a job with your passion, with your commitment comes automatically. At the end of the day, you should have a peaceful sleep. That is possible if you are enjoying the job. So whatever you do, you should do it with heart and mind in place. So you must enjoy it and don't just carry stress in that sense. But if you are enjoying your work, you enjoy your family, I think you will do it.